Global central banks are in panic. Why are they all lowering interest rates? Well, the important thing with all of this that I'm trying to do, okay, with you all, is um, have an idea about the macroeconomic conditions because macro is important. Macro rules. I mean, technical is technical. Technical, you're looking at a chart and you're deciding to do something and thinking or hoping that the past repeats itself. And in most cases, it does. But to um, actually, okay, so did I get cut off? I think it did. God dang it. No? Okay, it should be okay. Did I freeze? All right, I'm just going to continue. I don't know. No, I think I got cut off. Well, don't leave the live stream. I'm going to try to fix it, obviously. Okay, it just seems like it's back. Yeah, my internet is having issues. The point I'm trying to make is you have to have ideas about the macroeconomy. The macroeconomy is definitely what you should pay attention to, and I'm going to help you guys understand most of the intricacies of the macroeconomic, um, situation in the country and globally. So, again, my hat's off to the Kobesi letter. I'm on Twitter, so my handle is in the link. The links are in the show notes. You can follow me on Twitter, but you should definitely follow the Kobesi letter on Twitter. They have become my go-to because they summarize certain things I want to talk about much better than I could do in a few sentences. And so I have to do less work. The less I have to work, the better for me. And we don't agree with everything they're saying, but I agree with most of it. And when I do agree, and when there's a topic I want to expand on, talk about it, I'll put their screenshots up, and then I expand on it. But I think you should definitely confirm your technical picture that you're looking at a chart. Chart's going to tell you a lot of the story already, okay? But you should confirm or affirm whatever the chart is saying with some background in macroeconomic conditions. And as we know, Federal Reserve cut the rates by 50 basis points or 0.5% a couple of weeks ago. Well, right after that, China did, right? And what did that create? A massive 20% rally in the Chinese stock markets, okay? Now, if you understand economics at all, all the Federal Reserves or all the global central banks are lowering interest rates aggressively. Why are they doing that? Why do you guys think they're doing that? So if you have a picture of the history of why global central banks cut interest rates, then you will understand what they're expecting of the macroeconomic conditions to get better going forward or to get worse. Well, Economics 101, Federal Reserve or global central banks do not lower interest rates if they think everything is great. Now, the Federal Reserve, US Federal Reserve, gaslights quite a bit. They say everything is fine, unemployment is fine, inflation is fine, all this is fine, GDP is fine, but we're going to cut rates anyway. I'm like, no, it doesn't work like that. Nobody's buying that, right? Nobody's buying that story. What I'm looking at, though, because I said, if everything is fine, why are all the central banks panicking? So there were 21 interest rate cuts conducted by global central banks in September, just past month, the most since April 2020. Well, what happened in April 2020? In early 2020, we got something called COVID, right? The Black Swan event that crippled the global economy. And what did all the central banks start doing? Immediately start cutting rates, right? So the fact that there were 21 interest rate cuts conducted by global central banks just in September in concert with each other, it concluded with the Chinese PBOC cutting the rates 50 basis points. And 50 basis points is unheard of in China, okay? And I talked about that last week, that they're worried about deflation, not inflation, and they're worried about their economy slowing down. We have a video on the channel about that. And there we are. So all global central banks are panicking to the point that they're cutting massively. I'm like, okay, That what does that foretell though? That says that the economy, their expectation of the economy going forward, and all this data that comes out, like unemployment today, is a lagging data. Is lagging, right? It's from last month. Well, show me the paper for tomorrow, then I'll tell you what the market's going to do. But all these lagging indicators that they're looking at must be presenting a challenging picture to the global central banks. That's why they're lowering interest rates. And I agree, and all of them are trying to manage this mythical creature called soft landing. Is it going to happen? No. Last 6 times that interest rate cuts happen or the Fed pivot happened, 5 out of the 6, we went into a recession, regardless of what the global central banks were doing. So outside of the pandemic response, this is the 3rd largest month of monetary easing since 2008. We know what happened in 2008. What happened? Great financial crisis. Millions losing their homes and banks going under. I remember those days. I remember that crash. All the global central banks aggressively lower rates, but what happened? Massive recession, right? Okay. So when all these global central banks are cutting rates, they are expecting some softness ahead because they're always preempting, right? They're trying to preempt what they're seeing or what they think is going to come. And, this all comes as central banks across the globe believe they can achieve a soft landing. Well, that's the mythical creature that I talked about last, actually, I think it was on Wednesday, or no, it was last Power Hour, last Friday. And I'm pretty sure we'll have a video. There's something called the Fed pivot. Fed pivots between QT, quantitative tightening, to QE, quantitative easing. Well, with this rate cut, they announced basically saying that QE is here. Don't worry, we're going to soft land to 747 on a patch of grass. I'm like, no, I haven't seen it yet. I mean, over the last 40 years, this was attempted 6 times, 5 times it failed. 1 time quasi it happened. But I do understand why they're cutting rates. I know why they're panicking, and they're not, they're looking ahead and not seeing a pretty picture. So meanwhile, Germany's GDP is expected to contract for 2 straight years for the first time since 2002. China is also on track to miss its annual economic growth target of 5% GDP as they fight the streak of deflation since 1999. Again, I am not being the bearer of bad news. I'm trying to interpret the tea leaves for you guys because I have an econ degree. I have a finance and economics degree. So I do understand what they're trying to do. And my conclusion is, will they be successful? And what will I do going forward with my trading? How will I adapt? Well, I had a negative bias for 6 months. I'm still making money. But the point is, I want you to be prepared for what's ahead. And that's why I do these segments. And the reason I love the Kobesi letter on Twitter is because they always end up with a graph, which to me sums it all up. So in this graph, September 24th is biggest month of monetary easing since April 2020. We know what happened in April 2020. Yes, it was a black swan event, but if you guys go back to 08, so this chart goes back to 2001, about 23, 24 years. You guys see these little blips, right? So on the x-axis and y-axis, there's different data, obviously, but you can take a screenshot of this and then blow it up pretty much, or you can go follow the Kobesi letter and you guys will see the same tweet. Is that look at the spike that took place in 08, 09, and then it just kind of subsided. Those spikes mean those are the interest rate cuts. Those are the easing. Those are the quantitative easing that's happening now, right? It's just started. So during the pandemic, so every time that you see a blip up on those charts, that, by the way, coincides with the recession, okay? And that's the reason they're cutting the rates. They are expecting a soft landing, but if it doesn't happen, they're going to cut rates more aggressively going forward. And the expectation of the Fed is that they're going to cut rates 200 basis points by the end of 2025. That's 2 percentage points. That's a lot. So we had ZIRP, zero interest rate policy, for literally since 2008, right? And then it accelerated in 2020 due to the pandemic. And then in 2022, finally, after 15, 17 years of zero interest rate policy, Fed raised rates from 0 to 5 as to kill inflation, because all that pumping money created massive amount of inflation, and we all are suffering from the effects of that inflation. Everything we're buying is, I don't know, 100% higher over the last 3 years. That includes food, but and energy, obviously, which the Fed does not count food and energy for some reason. I guess those people in Washington don't eat or drive. But so now, as you guys can see with the oval or circle on the right-hand side of this chart, September 24th was the largest day of global central bank interest rate cutting, and it happened. 21 cuts took place. So when this chart kind of spikes up, that means they are looking ahead and not seeing a pretty picture, and they're trying to preempt a recession, and they're cutting interest rates. So I'll end with the title that I started. Global central banks are in panic. Why are they all lowering interest rates? Hope you guys understood why they're trying to lower interest rates, what they're seeing, and I hope I was able to kind of read the tea leaves for you guys. And this remains to be seen, by the way. It's not written in stone, but then every time I'm on Mondays and Fridays, we'll keep track of what we said in the past. And my conclusion is that we are definitely going into a massive slowdown, because recession has a, quite a different description by everybody. But we're definitely going in a major slowdown. And Federal Reserve, I think, is behind the curve, and I don't think they're going to be able to avoid a slowdown, if not a recession. So that's the conclusion.